LUCID versus NIO stock. Which stock is most promising? How did Warren Buffett become one of the richest personalities in the world only by investing in stocks? Isn't it shocking? Not at all. Even you can earn a vast amount of money from the stock market, but the chances increase when you get a good advisor who has great experience in this field. I'll tell you all you need to know about two trending EV stocks. And don't forget, this is not financial advice. Welcome to eMotion. In today's video, you'll learn about the LUCID versus NIO stock and which EV stock is most promising, so make sure you watch the video till the end. As we all know, there's an explosion of EVs everywhere, either in the car market or in the stock market. The demand for electric vehicles is projected to explode in the next decade. EVs represented about 5% of all new car sales in 2020 and are expected to represent 48% of all new car sales sold in 2030. This is due to an accelerated shift toward clean energy solutions at the global level. Today, I'll be analyzing and comparing EV manufacturers LUCID Group, LCID, and NIO. Today, we'll discuss the two mind-blowing companies that have exploded in the EV market. I'm talking about some of the biggest brands in the EV sector, LUCID and NIO. LUCID is the first EV startup that went public through an SPAC deal to produce saleable vehicles for consumers. This milestone is crucial for LUCID, which debuted on the NASDAQ and is viewed as a frontrunner to the rival leader Tesla. And on the other side, well, if you're an electric vehicle lover like us, you might have heard the news. There's a new EV manufacturer that's looking to mass produce affordable models. That manufacturer is NIO. We all know about Tesla and other premium EV manufacturers, but these aren't always the most accessible options for the everyday driver. So it's great to see new companies out there that are trying to make electric motoring more accessible for all. In the EV market, customers are directly affected by the decisions of these companies, as their price fluctuation, design enhancement, change in features, and many other things. But there's also a market where the value of companies increase or decrease with the company's performance in the real market, and that is the stock market. When a company performs well in the market, the stock value of that company rises, and vice versa. Recently, LCID has started shipments of its EVs and is valued at a market cap of $87.22 billion. NIO is one of the largest EV manufacturers in China and is valued at a market cap of $62 billion. If we see the bull case of LCID, LUCID Group's stock is up more than 435% year-to-date, YTD. LCID has gained steam in the recent months after its AirDream Edition received a range rating of 520 miles by the Environmental Protection Agency. This is the highest range for any EV rated by the EPA. LUCID's first car is a $169,000 special edition of its flagship sedan called the AirDream Edition. The company plans to produce just 520 of the Dream Edition models. Pricing for an entry-level version of the car, the LUCID Air Sedan, starts at $77,400. LUCID said it has received more than 1,300 total reservations so far. LUCID has claimed that the number of reservations for its lineup of EVs stands at 17,000, and the company began initial shipments recently. The company raised $4.4 billion in cash after its reverse merger with Churchill Capital in July 2021, and the proceeds will be used to expand manufacturing capabilities as well as fund its operations in the next year. The AirDream Edition will be priced at $169,000, which is very expensive for the average buyer. But LUCID Motors expects sales will exceed $2 billion next year and touch $10 billion by 2024, which is quite exceptional for a company that had no revenue only 2 months back. And when we take a look at NIO, we learn that NIO is a Chinese electric car company that already produces a number of premium models for the higher end of the market. They're now looking at creating a sub-brand that will produce affordable EV models to rival the current offerings from Toyota and Volkswagen. NIO isn't the most popular brand in Europe, yet. In fact, they've only really launched their models as a test in Norway, but they have hopes to enter the UK market soon if there's enough interest. The total number of EVs sold globally rose by 160% year-over-year in the first half of 2021. China remained the largest EV market in the world and accounted for 42% of total sales of 2.6 million units in this period. In fact, the number of EVs sold in the country in Q1 and Q2 of 2022 was similar to the number of vehicles sold in the whole year of 2021. Comparatively, NIO sold 66,395 vehicles in the first 3 quarters of this year. accounting for 3.3% of China's total market. Even if the company can maintain its market share going forward, NIO is well positioned to generate robust sales in the future. But investors should note that NIO's vehicle deliveries fell by 27.5% year-over-year in the month of October due to lower production volumes on the back of supply chain disruptions and the upgrading of manufacturing lines. Despite the sharp drop in NIO's stock price, investors should be aware that EV stocks will remain range-bound and fragile in 2022 for a variety of reasons. Firstly, commodity prices have risen as a result of supply chain disruptions caused by the pandemic and the ongoing conflict between Russia and Ukraine. While manufacturing units were shut down due to lockdowns, the Russian invasion drove nickel contract prices up by more than 100% last month to $100,000 per ton. Despite supply chain issues, NIO delivered nearly 26,000 units in the first quarter of 2022, up from 4,000 in the first quarter of 2020. Analysts predict that NIO sales will increase by 68.9% to $9.58 billion in 2022. Because of higher prices and delays in vehicle production, these estimates are bound to fall. Even if NIO reports $8.5 billion in revenue this year, the stock is valued at a forward price-to-sales multiple of 4.5, which is quite appealing. NIO's vehicle sales surged close to 500% year-over-year to $1.13 billion. Comparatively, the total sales were up 482% at $1.21 billion. The company's gross profit improved to $237.3 million, compared to a gross loss of $26 million in the year-ago period. The improvement in gross margins allowed NIO to narrow its operating loss by 81.2% year-over-year to $45.2 million. Lucid Motors, on the other hand, plans to invest $350 million in capital expenditures between 2021 and 2023 to improve manufacturing capabilities. It plans to increase CapEx at a 7% annual rate after 2023. These investments will allow Lucid Motors to end 2023 with a manufacturing capacity of 53,000 units each year. Lucid Motors has claimed the Lucid Air EV has a range of over 500 miles on a single charge, which is on par with peers. I think it's a little bit difficult to compare the valuations of NIO with Lucid Motors due to the latter's lack of revenue and earnings. However, if Lucid Motors can race towards profitability while growing its top line at a stellar pace, expand its portfolio and enter other markets, its stock can crush the broader indexes and derive multifold returns in this decade. However, it also carries substantial risk given the stock is already valued at a market cap of $38 billion without a dollar in sales. Therefore, for the more conservative investors like myself, I like NIO more at this time, as the company also offers the potential to outpace its peers and the stock has recently taken a dip, which allows cheaper entry points. So, guys, I believe this information about Lucid and NIO will be useful in your stock journey. Alright guys, that's pretty much it for this video. So if you like this video, make sure to give it a thumbs up and don't forget to smash that subscribe button and hit the bell icon to get the latest updates. Thanks for watching.